Hello everybody, it's Wednesday, October 19th. It is around 4:53 p.m. Eastern Time. Just want to recap on what happened in crude oil today and kind of how it unfolded and what kind of triggered a short-term play to the downside on crude oil. Now, if we just take a quick look at the US dollar index, this is a 60-minute chart. You can see at the top, and it's the US dollar index, and I'm zoomed out about 2 months here. Now, if I just zoom out a little bit farther, you can see that we've had a nice run in the US dollar index to the upside, and not too long ago we saw a breakdown through the support trend line, and since then it's continued to sell off into an oversold condition, and more or less we're trading right into a key support zone, which is a previous peak and some this breakout level where we had a test, a previous trough here. So we're right down at a key support zone, and yesterday we saw a nice bounce up in the US dollar index, showing that there's some buying down at this level. So it's a nice impulse leg. The fact that it broke a previous high, I'll just zoom in a little bit here, make it a little easier on the eyes. The fact that it broke a previous high shows that there's signs of some strength. Now overall, what I'm looking at in the US dollar here is we've got this possible rounding bottom starting to form, and we've got, just looking across this level here, we've got a key resistance zone. But what I feel is the fact that we're down at this key support zone, we are starting to see a bit of a base form, and I have a feeling we could see the US dollar index move on up to the 78.50 area, and possibly even 78.75 somewhere up here. And of course, if we see a rise in the US dollar index, it's going to put pressure on stocks and commodities. Now, if we just see how that plays out to how crude oil is, so here's a crude oil chart. This is the daily chart. And you can see we zoom back several months. And of course, this is the futures. I follow the underlyings, not any ETFs, because the ETF volume you can't use for finding real demand and seeing if there's actually demand or sellers in the market. So you got to stick with the underlying and watch the price action. A couple things I want to point out by using futures, again, is simply watching the volume. And if you can see on the volume here, we've seen a pretty strong decline overall, and we've seen a pretty strong rally to the upside in crude oil, and that divergence usually shows probably going to be some type of pullback very soon. And usually you get a pullback when you come up into a key resistance zone, which is right where we started to trade today. We came up and touched that level, started to see some selling kick in, and we saw on the intraday chart some actually sizable selling spikes. Now, before I jump to a shorter term time frame, just look back at this chart, and what do you see? You see more or less a wave down. You kind of see the market kind of hold up and kind of round out and start a decline, and then from there it just puts in a bearish pattern here, comes back up to a resistance zone, and then goes into free fall mode and sells off really sharply. And from there we got this bottoming candle, had a nice rebound, sold back down, and we more or less saw the crude oil price drift back up, and it did come right into a previous pivot low, so right into resistance. Overall volume was more or less declining, holding steady, and eventually it did fall to the downside here, which we actually took a short position over here and caught a nice 18% move using an inverse fund, catching this first draft down. Now what we see going on again here is simply another rise into this resistance zone, very similar to what we saw back in here. And now I'm anticipating that we might just see we could see a big sell-off, or we might just see a pullback to around the 82 area down into here, which is still pretty good potential. That's about 8 to 10 or 12% move in this inverse ETF. So we'll see how that plays out. But let's just zoom into the intraday chart. If I go to the 1 minute chart and just go back to regular trading hours here, get to the 1600, there we go, and squish this price action into the 9 o'clock area. This morning we saw a nice move. We were trading up at resistance. We have key resistance trading right up at this level, and we've seen crude oil work its way up, and usually right near the end of a move you'll see some surge, more or less like a blow off top, and we did. We got a nice push right up into that key resistance level, and right after that we pretty much saw a nice multi-wave pullback. And if you look at the volume on these futures here, all the big volume spikes, they're all strong selling volume. Any green spikes, there really aren't any green spikes, there's just the occasional little bit of buying. So the fact that we're seeing volume pressure pick up is a sign that we could be heading lower. Now later in the afternoon after lunch we saw the afternoon drift. Usually you see an afternoon drift go in the opposite direction of the day's trend. So here in the morning we had a downtrend with volume confirming. In the afternoon volume usually gets lighter. You usually see the market drift higher in the afternoon. You can see there was absolutely no volume and prices went up, and then it started to roll over again, and there's a little bit of red spikes starting to come in, and we actually took a short position right in here. And then literally the selling volume just picked up and we just saw the market dump into the close, and pretty much it's flatlined since then. So that's more or less what I was looking for and looking at in crude oil today as it unfolded. And I started writing a trade alert up here. By the time I got it done, again this is a 1 minute chart, the price had already moved down. At least it put in a little bit of a flag for a few minutes, and then finally it actually did break down pretty strong there on the beige book news that came out, and right now it's flatlining. But the one thing I want to point out here also on the, I'm going to go back to the daily chart. This is one really important indicator. You got to be very cautious. A lot of people don't realize this with ETFs. So many people focus just on ETFs, and it is a great way to lose money. What I'm looking at here is, look at this previous high in crude oil. We haven't broken it. We came right up there, and if there was a break of that, we'd simply get out. Risk is very small. You get in somewhere in here and you get out just a little bit above it, and you've got very little risk with a lot of potential to the downside, possibly even much larger to the downside. So there's a good risk reward ratio going on here, and the volume shows that you know, the price has been going up as the volume has been declining, and we've yet to break any previous significant highs. So they're still in a good downtrend. Now if we take a look at, just pull up some different funds here. USO is the one, or sorry, SCO is the fund that I'm looking at. This is a leverage fund, and this is one of the reasons you have to be very careful with leverage funds, is because they lose value if the fund doesn't go in its favor. Even if the underlying goes sideways, the fund will lose value. So this is an inverse fund, so we're seeing the opposite price action. It's a little hard to flip your brain around backwards if you're not used to looking at inverse funds, but more or less this was the previous high on the crude oil chart. And look what the leveraged ETF does. It shows that we actually broke this previous, on this inverse fund, it shows that we've actually broke the previous low. And of course, you'll see a volume pick up a little bit, and that's everybody who had bought this fund. They all put their stops in here. If it goes below this previous low, they want to get out. And inverse funds will do that. They'll run and go way beyond where the actual underlying is going, shake everybody out, and then you'll see them move sharply in your favor without you. And that's why a lot of traders who are trading ETFs pretty much have the timing down, but they get shaken out at the last minute, and then the investment goes and moves without them. And that's why you got to follow futures, not ETFs. And until you start following actual futures and the volume closely, you're going to get shaken out all the time unless you understand that there's going to be this pierce and this erosion of value. You actually have to set your stop quite a bit lower than a previous high or low using these leveraged ETFs. Anyways, that's kind of the tip of the week, and I'll talk to you guys later. Bye-bye.